So over $6,000 over the Christmas holidays. Today is January 1st. I have hit all my targets with my DeFi portfolio. Nothing too exciting to report. The markets over Christmas were extremely boring. Remember, boring is good. We just had a UIG call. So now every Wednesday we run a live call where everyone on the team comes in, shares their thoughts on the markets, what's happening, different positions, different strategies. And my guest spot, I was just sharing how honestly I'm down to consolidating everything into one position. The longer I do this, the more I realize the simpler your portfolio is, the better. You make sure you protect your capital. We'll talk about that in today's video. And 3, boring is good. We don't need a ton of action. And I see this in clients and members a lot. Like the portfolio is doing really, really good. And then we get bored. So we start clicking buttons, trying different things. And we just create a mess. We create chaos. Sometimes subconsciously, we literally don't feel like we deserve things to be good. And so we sabotage it. Since pretty much mid-December, other than a few exciting moments, it's been really boring. And my portfolio has printed over $6,000 since Christmas, which is awesome. And I've been extremely hands-off. Again, I check my DeFi portfolio for 10 or 15 minutes per day, but that's it. It should not take more. Now, today's video, we're going to claim the $6,000 of rewards, and I'm going to do something extremely boring. I'm going to buy more BTC and more ETH. We are using this portfolio to buy us more assets. Now, one really quick update. This morning, I'm testing a wrapped ETH USDT position on mainnet over on Uniswap. I just entered this, and I want to test it for 24 to 48 hours. Chances are high that I'll be moving all my positions on ETH mainnet. I look at this USDC CB BTC position over on PancakeSwap. At one point, it was 50-60%. I'm happy with that. But when my yields start dropping under 30%, then I'm like, okay, for the risk, not worth it. It's underperforming. And just the yields are a lot higher right now on ETH mainnet. So that's going to be a separate video. Do let me know if you want this series to continue. I'm building this portfolio up to $1 million, and I want to document the process and the journey there and talk about some of the unique risks that come with it. Now, again, you don't have to be intimidated by this because the yields I earn are going to be the same at 3,000, at 30,000, at 300,000, at 3 million. The strategy remains the same. And I will say this, simplify the portfolio. Keep it as simple as possible. I'm at the point where I'm most likely just going to have one position, and I'm going to scale that position because it becomes so much easier to manage my short, aka my hedge. Now, I want to share one little nugget of wisdom. I don't open a hedge right off the bat, but I will set an order in for said hedge. So again, I have to adjust this position because I just added another roughly $40,000 worth of ETH into this portfolio. But I have an order in that at 2875, my insurance policy will trigger, and do let me know if you want more content around that. But my insurance policy will trigger, and I can start offsetting the losses of my LP value with a profitable short. We've done a lot of videos on that. At one point, my LP portfolio was down by around $8,000, but my short was profitable by almost $9,000. We closed out my LP, we took profit on the short, we moved those profits back into my DeFi portfolio, and we reopened a position at around a 20% wide range. Again, I know sometimes these videos don't do well because everyone's looking for the new thing, the exciting thing, the new DEX, the new platform, Dude, I'm just over here collecting 40, 50, 60, 70% all day long in blue chip assets, nothing exciting. I don't need the excitement, neither do you. So again, just to shine light on my strategy here, I enjoyed Christmas, was super hands-off, collected $6,000, and then I simply move it onto Aave, and I split it between BTC and ETH. Now, my next step here, and let me know if you want to see that video, because I will be managing this portfolio sometime today. Happy to record it and release it on YouTube. But my next move here is to claim the 6,000, so it'll be around 6,259, plus take this $18,410 worth of ETH and BTC that I've been building with this portfolio. That'll give me just shy of $25,000, and I'm going to add it back into my DeFi portfolio, so I should be just shy of $350,000. I may let this thing run for just a little longer, so I have a perfect 350 grand, and then I'm going to be assessing some new opportunities on the ETH mainnet and entering 1 or 2 positions and bridging all these assets off base onto ETH, entering 1 to 2 positions, most likely in ETH stable and a BTC stable, and then trimming up my insurance policies and ultimately just resetting my portfolio. And my goal here is to have around $350,000, bump my average APR to around 75%. It's $250,000 a year, and bring this portfolio back to over the $20,000 mark, or $730 per day. Again, my first goal was to deploy $250,000. Now I want to scale this up to an average $1,000 per day, which will obviously bring me up to around $30,000 a month. And then I want to start compounding that and accelerating this portfolio to $500,000 while remaining hedged. So I do have capital set aside, and that's just in case the markets take a unexpected dump. I can recoup a lot of those losses. I call those insurance policy, and you can use DeFi Buddy to calculate those. Remember, and I'm going to end with this, remember, an LP is non-linear and a short will be linear. So you have to really think through that. This orange line is your naked LP, and what we mean by that is that that's just an LP position, that there's zero protection around it. There's no hedge. If the price of ETH in this instance starts going down, you can see my naked LP, 99,000, 97,000, 96,000, 95,000, 93, 91, all the way to around $89,000. So in this $100,000 position, DeFi Buddy is telling me I would lose around $9,000 at the bottom of my range. So I have to set up a position that if ETH takes a tumble, I will be up $9,000 on that short to recoup the losses. Now take a look at this curve though. Look at that orange line. If the price of ETH drops, it actually accelerates the loss of that value. It's non-linear. You've seen the curve. And if the price of ETH goes up, you can see that at first that curve is in your favor. You're going to bump up to $1,500 worth, and then 26, and then 3, and then 3.2. And then 3.3, and then 3.37, and that'll just remain constant at that point because you're fully converted into USDC. So remember, our DeFi portfolio is not a play for appreciation. That is our bull run bags. That is our treasury. We want to maintain cash value in our DeFi portfolio and have it cash flow and protect the downside. Full stop. And let that feed your bull run bags, or what we call the treasury. Now, if I just have $100,000 worth and I want to hold it, that's that pink line there, 100,000, 96, 94, 90, all the way down, nice and linear. But then of course you get the exposure to that upside potential. And that again is why we build bull run bags. So I see these two as very separate. Please in the comments, let me know. I cover a lot of this in our new book, Crypto Wealth Without Wall Street. Grab it on Amazon and study it. The amount of DMs and messages and emails I've been getting with people saying, I wish I had this when I started, tells me that we wrote something that's really, really helpful. So do grab it. It's on Amazon. And 100% of the proceeds do go to charities. So you are supporting an awesome cause at the exact same time. Now you can see this LP and short. That's that orange line. Please watch this before you leave this video. You'll notice that if I have an LP position and I have a short, if the price of ETH starts dropping for a moment, I'm actually going to be more profitable because of the correction by about $1,000. Because remember, your short is non-linear. And in this strategy, we are calculating a break even at the bottom of the range. So if your LP is non-linear and it accelerates at the bottom of that curve, when ETH starts dropping, you've got a 50-50 of ETH and USDC. And so your LP value is losing value a little slower at first and then speeding up at the bottom of the range, whereas your short is constant. So it's going to be profitable right off the bat and it's going to remain profitable at scale. So we do have a strategy where we actually capitalize on it. You have your insurance policy. If the market's correct, you're actually going to be out ahead. You can see your naked LP will lose, $3,500 of value here, but your short is going to gain around $4,000 or $5,000 worth of value. Then you can close your LP, you can close your short, you can take the extra $1,000 in profit, reopen your position, and you're actually ahead by $1,000 because of the crash. Now, you can keep waiting, and if you keep waiting, at the bottom of your range, the losses in your LP and the profit on your short will break even. Jump on DeFiBuddy.io. That is a free tool. This thing has been a beast to build, but we did want to create a free tool for the DeFi community. This stuff has changed my life. This stuff has made me completely financially independent. And the community we built and just everything we built has changed my life. And this was a contribution back into this space. So if you get a chance, jump on DeFiBuddy.io, bookmark it. It is free. Jump into the hedging calculator and just play with it. Run the numbers, run the math, get used to this chart so you can understand what actually, when you get this, you can become profitable. With that said, I'm going to get to work managing my portfolio. I'm going to move and bridge most of these assets onto ETH, reopen some new positions, trim up my short. And if you'd like to see that video, do let me know in the comments below. With that said, happy DeFi investing, and we'll see you in the next video. Peace.